Paytm Case Study. How appealing is Paytm prior to its IPO? The Indian payment giant is all around us, from making payments for our elite needs at Starbucks to even paying our local Paanwala. Paytm has it all covered. But this giant has once again made the news with its colossal Rs 16,600 crore IPO. Although the company still hasn't released its DRHP, in this video, we complete a quick case study on Paytm's business. This will in turn help you prepare for what's coming. Stay tuned to find out. Paytm, about the company. Looking at its size today, one would find it hard to believe that the company was founded just over a decade ago in 2010. Paytm was founded in August 2010 by Vijay Shekhar Sharma in Noida with a capital of $2 million. Unlike today, where Paytm is used as a means of payment for almost everything, the company then was only used as a means for prepaid mobile recharges. The company then added DTH recharges, postpaid and landline payments only by the year 2013. Although the first 3 years took a while for the company to grow into other fields, there was no stopping it from here. The very next year, the famed Paytm wallet was launched. What further gave a boost to this novice idea in 2014 was its acceptance as a means of payment by the Indian Railways and Uber. Paytm now had a customer base of 11.8 million. In the coming years, set apart the growth story of Paytm. Paytm now was also in the travel business, allowing their customers to book tickets for their needs. This saw their travel business touch a record booking of 2 million tickets per month. In addition to this, the 197 Communication became the official partner for the IPL team Mumbai Indians. They also acquired rights to the matches played in the home grounds for both national and international matches. This year alone saw its user base grow 104 million. Demonetization. Paytm's real growth, however, came in 2016. The year is known to us for demonetization and Jio. When PM Modi announced demonetization in 2016, the whole country was put into shock. Even at this point, only a fragment of the population used online payment over cash. But this was where Paytm saw an opportunity and pounced at it. Immediately, advertisements were made visible to show Paytm as an alternative to cash and a solution to the cash problem of the country. Indians bought into it. Another advantage that worked in Paytm's favor was the technological changes taking place in the smartphone sphere, in addition to the entry of Jio making the internet available to everyone who was willing to wait in line for a SIM. This further boosted the willingness of users to slowly adapt to online payments. There was no stopping Paytm now. The following year, they also went a step ahead to introduce Paytm Gold. This allowed users to purchase gold even for ₹1 at the respective rates. UPI versus Paytm. UPI was introduced into the Indian markets in 2016 in an attempt made by the government to boost online payments. Paytm, however, lacked to see the potential of the newly made interface. One could look at it from their point of view and understand that they had the first mover's advantage. This, however, should have stopped other apps depending on UPI payments like Google Pay and Phone Pay, right? As we can see today, Paytm's approach here was a disastrous move for the company's growth. Instead of what was expected, these UPI payment apps immediately began acquiring market share thanks to their genius marketing strategy, which involved giving back to their users and the conveniences that they provided. Paytm realized this too late and suffers the consequences to this date. Despite the setback, Paytm was valued at $10 billion in 2018. Paytm's shareholding breakdown. Let's have a quick look at the shareholding pattern. Vijay Shekhar Sharma, 14.67%. Ant Group, 29.71%. SoftBank Vision Fund, 19.63%. SAIF Partners, 18.56%. AGH, 7.18%. Berkshire Hathaway, 2.76%. Sharma Holding Company owns 5%. From this data, you can see that the founder Vijay Shekhar Sharma holds 14.67% stake in the company, with other notable venture capitalists as Ant Group, SoftBank Vision Fund, and SAIF Partners, etc. In a milestone for Indian startups, Warren Buffett's Berkshire Hathaway also invested in 197 Communications. The investment, however, did not involve directly being selected by Warren Buffett, but instead by its key fund manager, Todd Combs. In addition to this, Ratan Tata invested an undisclosed amount in the parent company of Paytm back in 2015. In the financial year of 2017, Paytm had a revenue of 813 crores, with an expenditure of 2,047 crores and a net loss of 886 crores. In the financial year of 2018, Paytm saw a revenue of 3,234 crores, whereas it saw an expenditure of 4,718 crores and a net loss of 1,491 crores. In the financial year of 2019, Paytm saw a revenue of 3,391 crores, an expenditure of 7,254 crores, and a net loss of 3,959 crores. And finally, in the financial year of 2020, Paytm saw a revenue of 3,350 crores, an expenditure of 5,861 crores, resulting in a net loss of 2,833 crores. From the above table, we can conclude that Paytm still has a long way to go, and there are a number of notable concerns with Paytm. For example, Paytm fell into hot waters when US-based company PayPal filed a suit against the company for using a logo similar to theirs in 2016. This could turn out to be a costly affair for Paytm if the court rules in favor. We can conclude that Paytm still has a long way to go, and there are a number of notable concerns with Paytm. For example, Paytm fell into hot waters when US-based company PayPal filed a suit against the company for using a logo similar to theirs in 2016. This could turn out to be a costly affair for Paytm if the court rules in favor of PayPal, as Paytm could also be affected as their logo is well established. Paytm has also been removed from Google Play Store for violating its guidelines. Despite being an early mover in the online payments, Paytm has yet to acquire a significant stake in the UPI segment, which currently hosts many large players. Paytm is yet to become a profitable enterprise, and with the increasing competition, this now looks like an even steeper challenge. Conclusion. Despite the multiple troubles plaguing Paytm, it still remains one of the most favored online payments app among Indians. The biggest strength to this date remains their 300 million plus user base. In their biggest development, this year Paytm is currently seeking a $25 to $30 billion valuation of an IPO. Let us know what you think about Paytm and its possible future in the comments below. Also, let us know if you found the Paytm case study and Paytm IPO offer to be attractive. Happy investing!